All right. All right. So this homework, that's the first thing I gotta get on is this homework. All right. So some people actually didn't understand what I meant by like turning into homework. Like y'all would like do the replay mode and not have the outcome of the setup. That's not how I was trying to like give the homework. Some of y'all didn't even follow instructions, bruh. Like I'm seeing demand, support setups, resistance setups. I'm just like, bro. But this is the first homework, so I'm just gonna give it a pass. Next week, I'm not checking it. It's over with. So so those are only two issues. Some people misunderstood the homework. They kind of like gave me something that I don't even really know. I'm gonna be honest. And then some people just didn't follow instructions. They gave me what they wanted to give me. I still checked it, but it was like, all right, like what we doing? You know what I'm saying? Oh, and another thing, the resubmission, like it's like real homework. Like when you turn in the homework, you can't delete it and then try to send some more homework. Like now you giving me more charts to check. Like you know what I'm saying? Like make sure all 5 charts are right when you send it in, and then that's it. You know what I'm saying? Uh, yeah, that's about it as far as the homework. Now today we about to go through some people homework so we can get some correction going on, and then I'm gonna show you some good examples that I have on my charts, and then I'm gonna just take questions, and then I'm gonna talk about how supply can turn into resistance because um when you got your supply box marked up, it may blast through it, but you can't give up on the setup. Like sometimes supply can turn into resistance, and you can still take that sale. You know what I'm saying? So I'm gonna show y'all some setups on that when supply do turn into resistance, and it's still valid. Now the supply may be invalid, but the resistance is not invalid. You get what I'm saying? I'm gonna show y'all. So let's go through this homework. Let's go through this homework, bro. You know what I'm saying? This incorrect. Why is this wrong? This is wrong because this is low probability. It's low probability because I don't know who this is. Domo, you marked up the entire zone instead of the candle. Supply and demand. Okay, so low probability supply and demand is when you mark up a general area, like there is no candle that leave a gap. When it's high probability, you're literally just looking for a candle that has a gap. Like you're just looking for one candle. Now, when you draw up the box, make sure you get the swing high attached to it. You know what I'm saying? So you can know where to put your stop loss at. You get what I'm saying? So yeah, this is wrong. But I'm gonna show you an example that's right. Let me see. Okay, this person got all theirs right. Okay, so now you see how this engulfing, this bearish engulfing right here, it dropped. Now when it dropped, it never had a pullback. You can't hear? If everybody can hear me, just give me a 1 in the chat if everybody can hear me. All right, Maria, you the only one that can't hear me. What's going on? Turn up your volume. What's going on? What's going on? Everybody can hear me. Yeah, you're gonna have to turn up your volume. All right, so back to the setup. Um, so you see how this is a bearish engulfing right here. This bearish engulfing never had a pullback. Now this pullback, it pulled back just a little bit. Yeah, it's our settings. Now this pullback have it pulled back just a little bit. So it covered that gap, but it still left this little gap right here in between this pullback and that bearish engulfing when it started. Right up in that area. That's high probability because it left that little clue right there that it want to go back to that area. That what makes this high probability because it's leaving clues. Low probability, there is no gaps. I'm gonna show y'all a setup that y'all was getting confused with because um it's certain setups that when it started dropping, it may wick out of the supply and then come back into the supply, then drop again. That's low probability. I'm gonna try to find one because I kept seeing it. I'm like, okay, they actually not understanding this. Let me see. This is good right here. Same thing, left the gap. I'm gonna try to find one that's wrong because okay, we know what looked right, but what looked wrong though. Let me see. Mm, that's right. That's right. I kept seeing it. I think it was on GBP AUD. But they go over mine. I'm gonna try though. I'm gonna try. That's right. That's right. Okay. Mm-hmm. I did leave a little smidge gap. Okay, that's correct. Let me see. Okay, nah, that's resistance. Gotta find one. Okay, they actually marked up the wrong candle right there. That this setup right here, this setup right here, it's correct. They just marked up the wrong candle. If you looking at like they're looking at this little doji, that's not the right candle to mark up. The right candle is this one right here. That's the right candle because it left that little gap right there. They probably didn't notice it, but you should have marked up this candle right there, draw the box around that candle, and then drag it across. And it literally would have tapped right into it. This little wick tapped right into that little gap, and then it dropped. Let me see. I really want to find um okay. Is this Maria right here? No, that's not Maria. No, that's not right. I really want to find this setup because I kept seeing it. This is right. I'd look good. I ain't gonna lie. Okay. Oh no, that's not right now. Damn. Okay. I'm trying to find this. This is, I don't know what this is. Oh, and another thing that y'all kept doing. Some of y'all was marking up y'all supply, but it was like way back. Now remember, we on a 5 minute chart. If we on a 5 minute chart, you're gonna want to look at the previous day or maybe the second day. But don't go no further than that. Like if you're going like far, far, like your that zone may not be respected. Zones that be respected is the most recent zones. Like only use the recent zones. You can look back, but I prefer just going a 15 minute chart or the 1 hour if you want to go way back. But don't if you're on a 5 minute, don't go past 2 days. Do not go past 2 days, please. I'm still trying to find this setup. I'm not gonna lie. Here we go, right here. This is perfect right here. Now, why is this low probability right here? Look, let me zoom in because we gotta get y'all right. Look right here at this green candle right here. You probably can't see it because it's kind of blending in with this navy blue or like this little purple box right here. But this green candle right here, this red candle wicked down. Now, if he would have drew off this box correctly, the zone would have been marked up on this candle right here. Since this candle wicked out of the box and then it closed inside of the box, low probability. When you're looking at high probability, it can only be an engulfing. That's it. Nothing, no little wicks, no nothing. The candle that you want to look for when you're trying to search for high probability supply and demand is this big red candle. So just imagine that this candle right here was not there. This little red candle was not there. But this red momentum candle came out of that area. Then that would be high probability. You get what I'm saying? So you can't have like little candles like pushing out of it. No, you gotta have a momentum candle, basically like an engulf with no pullback. That what makes it high probability. An engulf with no pullback. Because I kept seeing like certain setups, certain setups that have like it's a candle coming out of it, but like it wick out of it, close inside of it, then they have a momentum candle. Just like this one. Like it have a little candle, like a red candle, wick out of it, then they have a momentum count. No, that's not high probability because they already let the investors get back in off of that wick. You got to remember that wick is actually a pullback on the 1 minute chart. Like it is on the 1 minute chart, they're pulling back and then they drop again. That's low probability right there. That's low probability. Let's go through some more homework. We gotta go through some more homework and then we're gonna go. I'm gonna show you some setups that I have marked up for this Zoom, and then I'm gonna take questions, and then we're gonna go to supply, turn into resistance. So who is this? Who is this? This is resistance. This is not supply. This is resistance right here. This is valid resistance, but this is not supply, bro. Not even gonna lie to you. The man not looking at it. What we got right here? This is resistance. You see what I'm saying? Like resistance. Well, okay, so people teach supply and demand completely. Like people have their ways of teaching supply and demand. I'm not about to knock any other traders that teach supply and demand because some people may say this is supply right here, but to me, that's not supply. That's actually resistance mixed with a liquidity grab. You know what I'm saying? So this is resistance because if you mark up the wicks, if you put two horizontal lines on this area right here, if you put two horizontal lines right there, that would be resistance. This is not supply right here. Yeah, bro was just doing whatever he wanted to do. I ain't gonna lie. Um, this would be an entry. So it was sometimes y'all have your entry wrong. This is a aggressive selling, and then they finally came back into it. The entry would be right here. Oh, he do have it right there. Okay, never mind. He just don't have the the risk reward ratio little box over the area. So this is right. Okay, good shit. Good shit. I ain't gonna lie. Yep, this is valid. Gap right there. Then it come back into it. Sell. He's immediately right there. Stop loss right. Perfect. Perfect. Oh yeah, my boy, he was going crazy. Gap right there. Tap right into it. Literally tap right into it and then drop. Perfect. I want to see something that's wrong because you know what I'm saying. We gotta make sure we understand why it's wrong. Oh yeah, this is the one that I couldn't see. Who is this? Chrissy. I just couldn't see your charts. I'm not gonna lie. I'm looking like, hold on. Couldn't see it. It was over with. Let me see. Okay, so why is this low probability right here? I think this is the same chart as the one I just showed, but you see, this should have been a candle that marked up. So you're looking for the last bullish candle before it dropped. Okay. Same for demand. You're looking for the last bearish candle before the up move. So supply, you're looking for the last bullish candle before the drop. So it would be this candle right here. Now, this candle already got tapped into because of this candle right here, this red one. You see how that wick lined up right with that candle and it closed. Low probability. Now it won, but it's still low probability. Like y'all just gotta understand the difference. Gotta understand the difference. Okay, so this is actually high probability right there. If you hit open, original, the chart would be bigger. Oh, okay. I think I got it zoom in. Yeah, no, you good though. You good. Just make sure like I can see it like how I can see it right here. You're good. Okay, so this is a high probability. You see how they pull back, but it never tapped into that last up candle. That blue candle right there, that's the last up candle. And then they finally came up there, got the investors in, and then they did the big drop. That's where we want to get in right here. That's why I like trading high probability. I mean, I trade low probability. Like the trade that I caught out last week on EU, that was a low probability demand, but it was still good. Like it still hit though. So this trade right here, um, the entry is right here, not over here, because this engulfing created a gap. Then it came back into that last up candle. This will be a sell right here, not over here. They already got the investors in on this move. This is the real move right here, not over here. So I just want to say that. Like once they tap into it that first time, it becomes low probability. So it's high probability until they tap back into it. Once they tap back into it, it's low probability now. Like it's immediately low probability. So right here, this high probability. Once it came back, low probability. They can just blast right through it. They like, you know what I'm saying? Like they can just disrespect your supply and then it's over with. You know what I'm saying? So this is definitely high probability, and then this is low over here. Let me see right here. This high probability got the last up move before the drop, and it's a little gap right there. That candle left a little gap. It came right into it, and then you sell. You think I'm looking at the chat? Let me see what y'all saying. Hold on. Add on via what counts as a closed candle and what doesn't. Okay, let me write that down. I'm gonna write that down. My bad. I'm just trying to get through people charts. I'm not even reading the chat. My fault, y'all. Once we close. All right, let me see what else y'all see on there. IML days. Funny. This is not IML. Funny. All right. All right. Are we looking at the gap created before and after the big candle is formed? Yes. Yes, we are. All right. So I'm gonna go through some more. What's okay? No, we got time. We going through a couple of these. Oh yeah, this one I was having a hard time seeing. I'm like, hold on. I can't see the candles. It was hard. I'm not gonna lie. It was hard. I couldn't really see. Okay, right here. This is a perfect example right here. Gap. Momentum coming out of it. Drop. Now, entry should really be right here, but right up in here, it became low probability. It still hit, but it's low probability once they tap into it that first time. This is when it become high probability. That first tap. The first tap, high probability, you should sold on the smart money engulf right here. It should sold right there. That's a 1-to-1. is the gap between the wick of the previous candle and the close of the first bearish candle. No, yeah, the gap is right here. The gap is this engulfing right here and this pullback. Between this pullback right here and that last bullish candle, that's the gap. That's the gap. So once it start pulling back, the gap start closing. You get what I'm saying? So once it start coming up, now the gap is getting closer because it's pulling up. Now we're getting closer. The gap is closing. Now we finally at where the move started. That's where we want to get in at once it start dropping. But the gap started once they dropped. Like even when this candle wasn't right here, this whole candle from the bullish candle, I mean from the last up move to the close, that is a gap until they start going up and they start filling in that candle right there. You get what I'm saying? I hope y'all understand what I'm talking about because this when this big engulfing bearish engulfing closed, that's a whole imbalance in the market. Like that's a whole gap in the market. But now this pullback created it's starting to close that gap in. Now it started dropping, but it still left that gap. Yeah, it's called an imbalance. It's gaps, imbalances, same thing. Same thing. I call it gaps. People call it imbalances, same thing. Yeah, you can't unsee it. That's why I like trading supply and demand, high probability, mainly because like the win rate is kind of like high. I'm not gonna lie. This is low probability. Now, why is I wish I can zoom in. This low probability because the candle did not blast out of that last up move. It's like a little doji right there. You probably can't see it. It's like a little doji right there. It did not blast out of it. It didn't blast out of it. So that became low probability. It still hit, but it's just low probability. Yeah, it's over with this. I'm sorry. I can't see nothing. Same thing for this. Okay, so with this type of setup right here, it blasts through your box, but you gotta realize that you still gotta box in that swing high too. You get what I'm saying? So if you're in a situation like this and it left a gap and it tapped on the top of your box, it's not invalid. You just gotta make sure you get the swing high of that too. You get what I'm saying? So make sure your box is at the low of that bullish candle, which is that little doji wick, the low of that wick, and the swing high. The swing high is over here. So make sure your box is over there. You know what I'm saying? So you can know like it's still valid because that's still a swing high. If we know that it's invalid, it's gonna break that high. It's just gonna be a loser. You know what I'm saying? So this is valid. You just gotta make sure you box in that swing high right there. Yeah, this is valid. This is actually good. I'll take that because there's liquidity down there. We got gaps all right here. This is all gaps because there is no pullbacks. I'm taking that every day. I'm taking that. But wouldn't that be invalid because the red candle closed in supply? Hold on, you talking about that last setup? K Smith, you talking about that last setup? Let's go back to it. Cause that you said cause that red candle. You talking about these two candles right here? No, 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 no. That there was no gap over there. There was no gap over there. The gap started over here. Once that engulfing came, that's the gap. That's the gap. You get what I'm saying? So yeah, that's what I'm, like it's a gap right there. Now over here, this is just resistance right here. Like if you line this up, this is just resistance. But once it started dropping, there was no gap until right here, and it never filled it in until it came back over here. Now you're good. No, you're good. So make sure you cover the wicks with the box, right? Yeah. Yep. Correct. Yep. Okay. Now this is what I was talking about. This is way too far. I'm not gonna lie. This is way too far. I mean, it did play out, but look like y'all gonna lose your mind trying to find all these gaps, bro. Like I don't overcomplicate it. I'm looking at most recent. Like you see how far this is from where recent prices, which is over here. I'm not about to lose my mind trying to find every single gap in the market. No. So I mean, they may win. Don't get me wrong. They may win if you find every little gap, but I'm not going that too far. I didn't understand this until I had to do my homework. Yeah. Yeah, the gaps, yeah. So yeah, right here, this is kind of a little bit too far for me. I'm not gonna lie. If I'm over here in the red area right here and I'm looking for setups, like say this is GBP USD and New York session, and we up in this area and I see there's a gap right there, I'm I'm probably not even gonna really consider it because we're just too far. Like price already made it. Like I'm just not doing it. It's not recent enough for me. So I'm just not taking it. But yeah, this is another one. The last up candle, momentum blasting out of it. It don't have no pullback, came back into it, dropped. As soon as it break that candle, we in, boom, 1-1, leader runner, we good. Like, this is high probability. This is something that I love. You just gotta learn the difference between low probability. Can you apply supply and demand gaps on higher time? Yes, yes. You can apply it to 15-minute chart, 30-minute chart, 1-hour chart, 4-hour chart. It don't matter. It's gonna be gaps all over the place on different time frames. We scalpers, so I like the 5-minute, but I don't recommend this on the 1 minute. You're gonna lose. You're gonna lose your shit. Not gonna lie. It's gaps everywhere. I wouldn't even recommend a 1-minute chart. 5-minute is the lowest that I would recommend. Yeah, swing traders 4-hour, 4-hour and daily. You can do it on it, but I'm not about to be waiting on days. I need my money today. I'm not doing that. So we got an end off right here, came back into it, and then we dropped. That should have been an entry right here. Or yeah, right here. Probably so. All right, so I'm gonna go through one more set of homework, and then I'm gonna show you some examples on my chart. Let me see this. Okay, so this person actually marked up the wrong. They didn't mark up the entire candle. So you gotta make sure you mark up the entire candle. We need Doyle Dictionary. You funny. Are these like Wakefield's, like Roger Banks? Wakefield's? Nah, I'm not gonna hold you. Nah, bro. This candle right here, he didn't mark up the whole candle, so he just got like the body of the candle and the high. That's not right. You know what I'm saying? Like, we gotta get the entire candle because it blasted out with a momentum and then came back into it. So you want to draw a box around that entire candle right there. Let me just see one that's wrong. I just need one that's wrong. Like, you got demand right there. Feel me? Bro was showing out. Okay, this is right. Let me just find a chart that's not right. No, I think that's resistance. No, that's right too. Yeah, that wasn't right at all. No, I don't know, bro. Yeah, this not right. Okay, this right. Damn, I can't even see it. But this one right here, I don't know if y'all can see it, but yeah, my shit was wrong. It's all right. This is the first homework. We good. You know what I'm saying? We good. Let me see. That's right. I need to find one that's wrong. Oh, actually, this is actually wrong. Why is this wrong? Why is this actually invalid? This setup right here. This is actually invalid because it wicked out of the box. This is a swing high. So remember, I said that you're gonna want to mark up the last up candle before the bearish move, which he did. This is correct, and it had a gap. This is correct. However, it blasted out of the box. Now this setup is invalid. Supply invalid, but this is resistance. Thank you. It became resistance. Thank you. It became resistance. So you immediately delete the box, put your horizontal lines, and you can take the sell. But just understand what type of setup you're taking, though. That's all we trying to do. We got to understand what setup we're taking. That's it. That's all. Do you understand correctly the gaps are formed because price left quick? Yeah, correct. Yeah. You know what you're talking about. Yeah. What if price fills a gap but doesn't come all the way back to the minimum? Will you still? No, it gotta come back to it. It gotta come back to it. It gotta come back to it. If so, say if this drop and it never come back into that area, no trade. It's that simple. No trade. You said, can I explain this setup one more time? All right, I'm gonna explain this setup one more time. Okay, so this is supposed to be high probability supply. It is because we got a gap right here. This drop, it pulled back a little bit, left that little smidge right there. This little area right here, that's the gap. It dropped, pulled up, dropped again, made an equal low. So now we got liquidity down here, and he got the liquidity right. So that's, you know what I'm saying, good shit. It come back up to it. Now, when it come back up to that area, it blasted through the swing high of it. The swing high is right here. That wick tapped the height of that supply. So now it's invalid. It's invalid. But if you put your horizontal lines on this swing high and drag it across, now it becomes resistance instead of supply. So it's still okay to take that trade. Now, if it never came back into this area, there is no trade. It's just that simple. It's that simple. I'm just reading the comments right now. See the structure pattern. It'd be a low probability. It would be low probability if it didn't have no supply. That's the only way it's gonna be low probability. Also, I'm curious to know: do you lead runners when there is a gap in market? Yeah, I'm looking left. So okay, so say I did take this resistance because this is really a resistance setup. If I take this setup and I'm looking left, I'm looking for liquidity or gaps to leave my runner. That's it. Once I reach liquidity, it can grab liquidity, go the other way. So sometimes it may come down here, grab liquidity down here, and then shoot up. I don't want to leave a runner when I know they just grab liquidity to go the other way. So I'm probably gonna get out at liquidity or where the other gap is at. Do you feel some on certain pairs? Certain pairs, nah. This happened on everything. I'm not gonna lie. This happened on everything. All right, so we about to get off the homework. Um, Everybody that didn't turn the homework, that's tough. I don't want to hear like you don't understand, bro. Like I gave y'all what Tuesday afternoon when I was in New Orleans, gave it to y'all. Wednesday, all day Thursday, 7 p.m. Eastern Standard Time on Friday, and people still didn't turn the homework. I don't want to hear it. People start losing. I don't want to hear it. I don't. All right, so um, hey, did you go over mine? No, I didn't. I didn't. Cause I want to make sure I get over all the stuff that I want to go through. We only got like 30 minutes, so I want to make sure I get through everything. So I'm just gonna show y'all my setup that I marked up just for this Zoom, so y'all can understand. Okay, so right here, this is the same thing, aggressive selling. Now, if this candle right here, if this red candle wicked on the low of this bullish candle, it will become low probability. But it never wicked on the low of that candle right there. It just blasted out of it. So they left the gap, came back into it. You would sell somewhere right here, and then you would get your dub. You said, can you explain how to decide the daily trend? Okay, so yeah, actually we can get over that because I think y'all understand. Do y'all understand high probability supply and demand and low probability supply and demand? No, keep going. Okay, we got one person that say no. Everybody else say yeah. Okay, I'm gonna go through over two more setups and then we're gonna go to how to determine the overall direction. We need low probability. No, we're gonna go over low probability for sure. We're gonna go over low probability. All right. So I'm gonna go through like two more setups of high probability, and then I'm gonna explain to y'all how to determine the direction. All right. So right here, this is a gap. This is a gap right here. It never came back into it. It pulled back just a little bit. It pulled back just a little bit right here, then dropped again. This right here is actually supply right here. If you want to be like real, this is actually supply. This is aggressive selling. But look what they did when they came to that area. It blasts right through it. Once it blasts right through it, it's deleted. Now we're waiting to see what it's gonna do right here. So we're basically just waiting for reactions. That's all we're doing. We're waiting for reactions. If it's not respecting levels, invalid, we're moving on. Like that's really all we're doing here is waiting for reactions. If it blasts through the supply, invalid. Is it turned to resistance? Like, you know what I'm saying? That's all we're doing. Go through this setup. I got these cells marked up. Okay, so this is just covering what I just said. So this looked like a beautiful setup right here. This looked like a beautiful setup. Like I'm not saying I'm about the full margin, but this just looked good. But then it blasts right through it. So I saw some homework where some people take a sale right here. Why would you take a sale when it already blasts through? It's not even respecting that. So that's invalid. That's not. This is invalid right here. So I'll just immediately just erase it. This is the perfect setup. This is the setup I've been talking about all day. Now let me make sure I draw the box correctly. Now, why is this setup right here low probability right here? Why is this low probability? This setup right here. Because this red candle right here, thank you. That bearish wick made it low probability right there. That red candle went lower and then closed inside of the box. It wicked below, yes, it wicked below, but then it closed in the box. So that made it low probability, because if it's high probability, it's gonna be momentum coming out of that area, no pullback. This little wick right here that closed up, that's a 1 minute pullback. That's a 1 minute pullback. So no, that's low probability. So not saying it's not gonna be a winner, but just know like the high probability and low probability. So this is low probability just off of this candle wick right there. Okay. Let's go to some more setups. I got some more setups, and then we're gonna cover the overall direction. I mean, honestly, we can cover that right now. I'm not gonna lie, because this is actually we're going over the same stuff. So when it comes to forex pairs, you have to go top down analysis. You have to. Now we trade on a 5 minute. So if you're on a 5 minute, if you trade the 5 minute chart, you need to look at the 1 hour and glance at the 4 hour. You do not need to look at the daily. I'm not gonna lie to you. Everybody be pushing. Look at the daily. I'm on a 5 minute chart taking entries. Why do I need to look at the daily? Glance at the 4 hour, look at the 1 hour levels, and then base your entries off of 5 minute levels. That's it. That's really it. So let me I'm just gonna delete all this stuff off of here. Then we're gonna go to the 4 hour. And I'm gonna take this off so it can look more clear. And I'm gonna take this off so it can look more clear too. Alright. So first of all, when you're trying to determine the overall direction of the higher time frame, where is the gaps in the market on the higher time frame? So right, if we're looking at this right now, we're looking like we're at a swing low. Look at price. We're at a swing low, and we also have gaps right here. It's a gap. That gap been tapped into. So we got gaps and we got liquidity up here, and we're at support on the 4 hour. Now, does that mean we about to immediately take a buy? No. We just got to know where we're at on the higher time frame. So we go to the 1 hour. We go to the 1 hour, and we need to see some levels or something. What is being respected? You know what I'm saying? Like, I don't like having a bias all the time, because bias can really hurt you. Even for indices, we know it's going up, but if you feel like it's going to go up every single day, you will lose. So don't have a bias. Don't come to the market just open-minded. It can drop, it can go up. So when you go to the 1 hour, after you glance at the 4 hour, look at the 1 hour and see if we on some major key levels in the recent like price action. Recent. Don't go all the way back over here trying to, you know what I'm saying? No, we need to look at recent price action. So we looked at the 4 hour. We had a support on the 4 hour, and then we come back over here on the 1 hour, and like, what's going on in the 1 hour? You know what I'm saying? It looked like we had a high probability supply got tapped into over here, but that's already been tapped into. So now, you know what I'm saying? Only thing that makes sense is liquidity. So on the 5 minute chart, I'm kind of looking for buys, but I still got to see something on the 5 minute chart. You get what I'm saying? So we're basing our moves on the 5 minute chart, but looking at where the gaps is at on the higher time frame. Are we at a swing? Are we at support on the higher time frame? Did they already grab liquidity? See if they already grab liquidity too. Like, did they swing lower and now they breaking up highs? Like, look at liquidity being grabbed on the higher time frames. Where the gaps at, and are you on a key level on the higher time frames? And that would base your analysis on a 5 minute to see if you want to take that setup or not. But this is just for forex pairs. I gotta say that because indices, you look on a 4 hour, there is no price action looking left. You know what I'm saying? That's why I mainly look at 1 hour and a 5 minute, because we gotta get some type of data. You know what I'm saying? Can everybody hear me? So make sure everybody here. All right. Everybody got kind of quiet. Y'all listening though. That's what's up. Y'all listening though. But yeah, it got kind of quiet, so I make sure everybody here. But yeah, so you have to come on. Can y'all erase that? Can y'all erase that? I don't even know how to erase that. Like, I don't even know how to erase that. Thank you. Please do not write on the screen. All right, so after we find the levels on the 1 hour and the 4 hour, and we see liquidity being grabbed, if they even grab liquidity at all, then we go to the 5 minute and see if we can see some levels or whatever. You know what I'm saying? So that's basically it. Like, I'm not gonna lie, like, I don't come to the market with a bias. I trade what I see. I don't be like, oh, this is gonna be a bearish week, a bullish week. What's going on? You know what I'm saying? What? So you taking buy because they grab liquidity? No, I'm only on a higher time frame. This is what I'm saying. So say, let me see something. See something like on a 4 hour or something. Mm, I need something like that dip lower because it would make more sense. Okay, right here. So right here, literally trade what you see. No, literally trade what you see. So right here, you see how this swing low right here. Oh crap, I'm messing up. You see how this swing low right here dip below. Now on the 5 minute chart, like just London session, New York session, if I'm in this area, I'm looking for buys. Why am I just looking for buys on the 5 minute chart in this area, on that circle area? Because they already got the liquidity on the higher time frames. So if they already got the liquidity on the higher time frames, I would be going for a buy going the other way on the 5 minute chart. That's why. That's why I said look on a higher time frame to see if they grab liquidity, because that can give you an idea as to where they want to go. And then look left on a higher time frame to see if it's some gaps. We got gaps up in here. So that's even more clues to take the buy. You get what I'm saying? So this would be actually give me a lot of confidence to take the buy on a 5 minute chart, London session, New York, up in this area, because they grab liquidity down here, and we got gaps over here, and we got a gap right here too. That's a gap too. So I'm taking that buy on the 5 minute to, you know what I'm saying? If I see a setup though, just because they did it on a higher time frame, if I don't see a setup, I'm not taking it. That's just mixing confluences on different time frames. That's all I'm saying. So okay, so anybody got any questions before I go to the new material, which supply turn into resistance? Any questions before I go into supply turn into resistance? When you lead a runner, do you move your stop loss at TP? At my entry, not TP. Let's rob it, bro. How do I do a checklist? If you were, I have to put that in announcements. What is a swing low? A swing low is the lowest point before it reverses. Can you drop a lower time frame? Can you drop on a lower time frame? Okay. When it comes to price action, breaking above candles, do you look for a certain number of rejections first or a certain number of printed candles? It depends on the setup. Um, I definitely don't really care about certain candlestick patterns on levels. I just want to see if it's breaking above. That's why you have to give your trades some breathing room. Give your trade some breathing room. Because if you give it too tight, it may tap you. It may come back and tap you, then go the other way. Now you pissed off. You know what I'm saying? So give your trade some breathing room, especially on like support and resistance setups. Those are the ones that they do a lot of manipulation. So like when like they grab liquidity and they go the other way, I like those type of setups versus just regular support and resistance setups, because it may break some candle highs, but then it may come down and get you again and then go up. And no, that's why I like to see liquidity grabs on support and resistance. I'm not gonna lie. Can you explain why you say 1 hour resistance perspective? Those just they just work hand in hand. 1 hour and 5 minutes, they just work hand in hand. But I'm about to go on the 5 minute chart to see what's in this pink area right here. Let me see. Oh damn, I can't even do it. I can't even do it. Damn, that's tough. I can't even do it because Trading View want to be on some BS. But yeah, but basically, in this shaded area, this circle area, you're gonna want to see some bullish setups. Now, does it mean it's gonna happen in this circle area? No. Yeah, I hate when that happens. That's just stupid. Okay, so all right, I'm about to go into supply turning into resistance. But that's basically it as far as the higher time frames. When it comes to indices, 1 hour, 5 minute, 1 hour and 5 minutes. That's it for me. I don't even look at the 4 hour like that. I don't even look at the 4 hour like that. Yeah, this is the 5 minute. Oh, this is actually the area? Is this the area? I don't think so, because they didn't even let me. It is? That's tough. Let's just play it out. Oh, no, it's not. No, it's not. This recent. Yeah, this recent. Okay, so let me go to the setup that support turn into resistance. All right, so I got something marked up right here. Because again, when you have high probability supply and demand, it don't even matter. Even low probability supply and demand, if it blasts through your supply box, do not give up on a setup. You don't know what type of candle about to close. Now, if the candle close, let's zoom in. If the candle close above your zone or above your wicks, the resistance setup is invalid and the supply setup is invalid. But now look at this setup right here. Let's stretch these candles out so we can see the real gap right there. So right here, this doji right here, it blasts out of it. Now, where's the gap? The gap is that little smidge right there. I can put a little box right there. The gap is right there. That's the gap in the market. Because if this red candle would have pulled back into that box, there is no gap. So this becomes a gap now. Now it drops some more, and then it did some little other BS, and then it came back into that area. Now, since it came back into that area, it actually wicked out of the box. You know what I'm saying? Like, even if you would have put the box up here, it wicked out of it. So now it's low. Now it's not like the supply box is invalid. So we take this off, and now it turns into resistance. Now this look clean. Now this look good. Now I'm taking this sale right here. I'm taking this sale. As soon as it break it below sale, stop loss, boom. And then we just take our 1-on-1 leader runner. So I'm gonna go through some more setups. But yeah, that's the you twin trade on high probability setups or always. I twin trade always. I have to. I'm not gonna lie. I always enter twice or 3 times. Always. But that's just me though. Everybody don't have to do that. All right, so we got right here, we got low probability supply. This low probability because the red candle wicked out of it. Y'all see it, like just like I've been saying earlier today. It wicked out of this area, and then it closed inside of it. Then it started dropping some more, come back into it. When it came back into it, if you take this box off, this is resistance as well. So if you're confused on setups, if it's supply or demand, do you use the same lot size on twin trades? Yes, I do. I do. Are you splitting lot size? No. So like on indices, like if I trade NAS, I usually do like 3 lots, but if I enter twice, I'm doing 6 lots. I'm not doing 1.50 to 1.50. No, I do just 6 lots. That's how I do it. You know what I'm saying? So if y'all however y'all want to break it up, like if y'all trade 2 standards and you want to just do 1 standard each, that's cool too. But your account size gotta handle that. Don't, you know what I'm saying? We're not over leveraging. We're not doing that. But yeah, this is a supply, high probability supply turn into resistance. Because if you mark up the zone, the horizontal lines, it become resistance right here. I got some more setups right here that I have marked up. That's just a regular break and retest. All right, here we go right here. Now, this is actually a beautiful setup, not even gonna lie. So we got a gap right here. This is a gap. Let's zoom in. This is gold, by the way. This is a gap. This engulf created a gap. The gap is right here. If you can't see it, from right here. My fault. Let me make that more cleaner. Matter of fact, let me change the color too. I'm gonna put yellow. From right here to right here, and then they start closing in the gap. Now these bullish candles start closing in the gap. Now we're waiting for candles to break its low, but it never break its low until they went above. Now let's take this off. And then we will delete this box, and now this becomes resistance. Why is this valid? Because no body of the candle closed above this swing high. We just got wicks just coming out of it. Now what is this also called? A liquidity grab. And look how fast they went away from it. And we got gaps right here. So this is a good setup right here. How do you mark up your support resistance? Like the body to the wick high? Yep, the body to the wick high. The body to the wick high. So you see the body of these candles and then the wick high. Now if it's major wicks in that area, just get the median of the wick high. So like you see how I didn't mark up, you see how I didn't mark up that swing high, but I made sure I got all the wicks within it. So like I do something like that instead of just having that swing high. Just make sure you get all the swing highs. Like get like mainly the majority of the wicks. You know what I'm saying? When it dropped, completely gap before. When it dropped, it completed. Yep, it completed a gap. Yep. When it dropped, it filled in everything over here. Let me make it smaller. It filled in everything, and they grab liquidity. They do everything on purpose. Like This drop right here, they filling in these imbalances, these gaps right here. Grab liquidity, dip lower in here. Now we're going back up. This is a setup for a buy too. We got major rejection, smart money, engulf right. Boom, like buy. How can I use magic keys on Mac? I don't have a Mac, so I can't even answer that. Could that second move be supply? Yeah, this supply right here too. Yeah, this right here is supply. Now, is they gonna come all the way back up here? I don't know. Do they? Let me see. Let me drag this across. No, they don't. So I wouldn't even keep waiting on that. All right, we got another setup right here. So we got high probability supply right here dropping, and then it comes back into it. But you see how it blasts through that supply area, and this is actually a swing high. So this is a valid supply, high probability, and it disrespected it. So we delete the box, and now it turns into resistance. And you would take that sell as it break this low of a candle, and we're aiming for liquidity or areas to fill. Same stuff over and over, just clockwork. I think I got one more setup, and then guess we can just wrap this stuff up. But yeah, all of this stuff is gonna be the same stuff over and over. So right here, we got aggressive selling right here, a gap attached to it. Let me stretch the candle so you can see it. Oh, that was a little bit too big. A little bit too big. Okay, so this gap right here, if you can't see it, the gap is right there. That's the gap. It pulled back just a little bit, but it never tapped back into that last up candle. It dropped, then it comes back into it. Let's delete this. When it comes back into that supply, it breaks that swing high right there. It breaks it. So we're going to delete it. We're going to delete it. Delete that supply box. But now it turns into a resistance setup. It's the same stuff over and over. Liquidity grab. Where liquidity grab? I don't see one. All right. So any last questions though? Any last questions? You ever thought about doing live trading? I might. It just, I ain't gonna lie. The real reason why I don't really like doing live trading because it's a lot of pressure. I'm not gonna lie, and I feel like I'm gonna do a lot of bad decision making. Not even gonna cap with nobody on here. Big bro is not with the live trading. I will live trade, but I want to be so laser locked in because I don't want to lose no money. I'm not even gonna lie to you. Like it's real money on the line. I'm asking because y'all asked yesterday. Was this last example that you did being low risk or high risk? This example right here, this is just a regular resistance. This is not really high. Honestly, when it comes to support and resistance, what makes support and resistance high probability is when they're a liquidity grab. When it's a liquidity grab with the support and resistance, that's when it become high. When they dip higher, then drop, or dip lower, then go up. That one makes it more high probability when it comes to support and resistance. There's a push or a break. Does a push have a breaker structure? Yeah, not necessarily. No, it don't have to have a breaker structure. Psychology is huge. Yeah, it's huge. Somebody actually asked me, can I talk about psychology when sitting in drawdown? Like sometimes when y'all in y'all trades, y'all may be in some drawdown for a little minute before y'all get into profit. You gotta believe in the system. Like you have to. If you don't believe in it, then you probably gonna pull out and you're gonna be afraid. So you gotta believe, like, okay, like I only gonna get out 1-to-1, or some of y'all getting out before it actually reach 1-to-1. Like, no, you gotta hold that. You gotta hold that. How do you work on psychology? Um, I mean, I just sometimes I walk away. Sometimes I play 2K. I just play the game right here. Um, I just try to not to be too emotional. How do you work on executing your trades without fear? That comes with experience. I'm not gonna lie, because if you train a new trading style and you haven't had no success with it yet, you're not gonna really believe in it. You're not. It's hard to hold a whole trade. It is, but you gonna hold a loser? You know what I'm saying? Are you gonna hold a loser or are you gonna hold a dub? You let your losers hit stop loss? Yeah. I gotta give myself 110% chance to win. If I get out early, I didn't even give myself an opportunity to win. So I hold it. Same for winners. If it don't hit my TP, over with. And another thing I do want to say before we got 7 minutes left. When when price is reaching my 1-to-1 RR, like it's like maybe a pip away, I'm moving my stop loss to break even. Those trades that I called out when I was in New Orleans, That was actually a break even. Now that may be a loss to y'all, but when it's getting close to my take profit, I'm moving my stop loss to break even. Maybe a pip, maybe like 1 pip. I'm moving my stop loss to break even. I gotta say that. I gotta say that. Do you use stop orders? Yeah, I don't. Nah, not really. If I'm at break even, that's a dub for me. I mean, yeah, yeah. Don't move that stop loss back either. Yeah, yeah. Dude, don't do that. Do not adjust your stop loss. Please don't do that. I blew my account doing that. Show one example of NAS. Okay, we can look at NAS. We can look at NAS before we get off of this. What type of example? Or y'all just want to see the trades that we was looking at? Cause it was hella setups. I don't know if y'all took this sale right here, but this is actually good. Let's see. Yeah, I didn't trade Friday because NFP obviously, but some of y'all took the sale, which is Let me look left. Put a box around this. Let me see. Yeah, this is valid right here. This is actually good. If you took this sale, you're good. Like this is valid. Um, what is this? Thursday. This is actually now. This was kind of crazy. This is a swing low. It tapped back into it and it started going up. This is valid, but this is the New York Stock Exchange open. I didn't take it. Some of y'all took it. Good shit. You know what I'm saying? But I just didn't take it. And that was kind of the only good setup. And actually, it threw another beautiful setup right here with this gap right here. And then, you know what I'm saying? Same thing, just like this is just high probability demand. It tapped right into it and then it went up a little bit. You could have took some of this before a reverse. Friday was sweet. Oh no, I wasn't. Can you explain a little bit when you seen at 9:30? There's a process. Oh, right here on this day right here. This was Thursday. Yeah, this was Thursday. This is a swing low. Let me adjust this real quick. This is a swing low. At 9:30, it tapped into that swing low. Let me zoom in. It tapped into that swing low. It's ready to buy. So you could have bought as it broke up here or right here. You could have bought. Either one is still valid. Now, do I trade the open? I got it on my announcements. If you trade the open, that's at your own risk. I don't preach that anymore. I did used to trade the open, but I don't do that anymore. So no. So if you took it, good stuff. If you didn't, then I mean it was other setups. You don't gotta keep, you know what I'm saying? This stuff is universal. If NAS dry up, if NAS start tripping in the next couple months, we got other pairs to trade. We do not have to trade NAS forever. We just don't have to do that. You know what I'm saying? That's wifey, but if she start tripping, I'm looking elsewhere. That's just what it is. I notice a lot of times when I'm waiting for the entry candle, man, how do I stop getting faked out? Slowly below. How you stop getting faked out? What type of setup is it? Is it a low probability demand or high probability demand? Show low probability NAS. Okay, let me show you some low probability NAS. That's the afternoon session. Oh, we took this. This was a good day. This was a good setup right here. This setup right here, this was good. I'm not gonna lie. And it started dropping, but we still got our bread though. We got our bread. Low probability. This is an ugly setup. Not even going cap. This is actually high probability supply. So even a supply is hitting. So right here from that candle on up, that's the last up candle before the bearish move, and then it tapped into it and dropped. That's high probability. That's not what you asked for, but I just want to just say that. I'm trying to find a low probability setup during the session that we trade. Because I don't read, like when I back test NAS, I only look at the session that I'm trading. I don't care about anything that happens outside of it or before it. Only the time that I show up. You know what I'm saying? That's how I back test. I don't really back test outside of my trading hours. That's why NAS dropped so hard. You know, are you still bullish on NAS? I'm just, bro. I'm trading what I see. If it start dropping next week, I'm gonna take the sale. Like if I see something good, if I see some high probability supply on NAS, I'm gonna just take it. It's the same thing. It's when it's supply and demand and the market is ranging. Honestly, I would recommend just look for high probability supply and demand when it's ranging. Don't go for low probability when it's ranging. I can't find a I don't let me see. I'm gonna find a low probability NAS setup. So we're gonna be looking for supply zones only in the downtrend. When it's in a range, there could be supply and demand in a range. Like you get on, I hope I understand that. Like it could be supply and demand inside of a range. So like when price is in between, it may be gaps at the top and gaps at the bottom. Like you know what I'm saying? You gotta pay attention to those little like them little smidges because it could be supply and demand on both. How early are you eyeing the market? So I'm on Eastern Standard Time. I wake up around 9 o'clock, and then I'm looking for setups around 9:35 and after, or really like 9:37 or 9:40. That's it. I ain't gonna lie, I don't really see a lot of low probability supply and demand on NAS. See, here go a good one right here. Here go a beautiful one right here. Now this high probability right here. Now I'm loading up. I ain't even gonna lie to y'all. If I see something like this, let me take this off. If I see something like this, we got a high probability blasting off a bank level. I'm loading up. Can't even lie. Because I know this about to hit. So yeah, right here, this is a high probability right here. This is something that y'all took that we talked about on our last webinar. But I honestly like low probability NAS. It's gonna be a swing low, a swing high, being respected, or I'm taking high probability on NAS because we know how volatile this is. Where would I enter on what? On this one right here, Christopher. You talking about this one right here? Right here. I'm entering right here as the break of the candle. Break of the candle. Another thing, if y'all be kind of iffy on should I take this setup on a break of that candle, wait for the next candle to break. Now don't wait too long though, because now your RR is starting to get crazy. Because if you wait until you buy up here, now your stop loss down here, and we go for a minimum 1-to-1. So now you gotta go for right here. That's not smart. But if you're not comfortable with waiting for that candle to break, wait for the next candle to break and then get in. But make sure it's at least close to the zone. Like it gotta be close to the zone. Don't be trying to get in. Let me see a setup that you will have to wait like 3 candles to get in. Let me hold on. Cause sometimes you do like it be a setup that you kind of iffy about, and then you would get in. So this actually a low probability supply and demand right here for old girl that asked for this right here. This is low probability demand. Why is it low probability? It's low probability because it wicked out with that green candle, just like the supply. Just like the supply. It wicked out of it, they came back into it. It's low probability. Now you could have won, don't get me wrong. You could buy it right here, boom. And then you could take your bread and take it to the next bank level. So you don't get in at the open at all. Yeah, nope. No, sir. No, sir. But yeah, that's about it, man. I'm gonna give y'all the homework on Tuesday. I'm gonna open up the chat for the homework on Tuesday. Please, y'all, but please, when you rewatch this, whoever that didn't come to this live webinar, please follow instructions, bro. Because this time I'm not checking it. I gave y'all a pass, but this time I'm not checking it, bro. I'm not even gonna lie to y'all. Y'all gonna be mad at me, but I'm not gonna check it. If it's not right, I'm not checking it. Now, if you get it wrong, that's okay. But if you actually doing your own thing and sending charts, not checking it. So that's about it. Do an example of how to submit. Good question. Good question. So I got an idea of the homework, but this is not the homework. I'm gonna show y'all how I would prefer you to turn in the homework. So say if I ask for let me see. Let's get off NAS because okay. No, we just did supply. Let's go to gold. Gold has some good setups. So I'm only looking for high probability. Say if this is the homework. I'm only looking for high probability demand only. Okay. So this is how I would like y'all to do the homework. So let's do now. You don't have to do replay mode. This is just me doing an example. Okay. Let me fast forward a little bit. Okay. Now you don't have to do replay mode if you don't want to, but I'm gonna want you to mark up the box that created high probability demand. I want you to mark up where you're gonna enter the trade. So maybe we're gonna enter on a break of that candle right there. Put where your stop loss going to be at. Something right there. Make sure you mark up your 1-to-1, and then the runner. Now, where's the runner going to go? Now, we already know the outcome. Let's just fast forward it because we already know the outcome of it. But we need to know where liquidity at, where the gap at, and where the runner will go. Now, in my opinion, remember, my take profits, runners, only for runners, is either filling in gaps or liquidity. So right here, we can do something like this. Nah, that's ugly. I'm gonna just type in like gap or something. I'm gonna type in gap, and then I'm gonna line up. Put this right here. I'm gonna line up where I want my target to go. I don't know if it went up there. Okay, it went up there right there. So right there, I'm gonna type in like runner complete or something like that. It don't have to be like this, but this is just like so I can know like, okay, where would you leave your runner for? So like runner would be like right there. And honestly, you don't even need to have this this line right there, but just show me like where's the circle at? Where is the circle? Like right here. This will be where the runner would go. But make sure you still mark up where the gaps is in the market at. So you honestly, you don't even gotta have this this horizontal line. You don't have to do that. But just have like, okay, runner would be right here. And then we got the 1-on-1, and then it just makes sense. Like make sure the runner makes sense. Yeah, that's a gap. Yeah, that's a gap. Yeah, make sure the runner makes sense. So don't just be like, oh, runner right here. Why are you leaving the runner right there? We always gotta know why are we doing stuff. We're not just doing stuff just to be doing stuff. I don't know like what anybody else doing, but I need reasoning as to why I'm doing this. How do you get your charts to look so clean? What you mean? All I got is candles on here. So yeah, that's kind of like how I want the homework. You honestly, you don't even have to type in demand. We know what we're looking for. It's on the homework. It's on the homework. Just show me where your entry would be at with the what tool is this? The long position and short position tool, and then show me where your runner would go, and show me where the gaps are at and the liquidity. So right here, we have liquidity down here and up here. That's where the liquidity is at. Just show me where the liquidity at, the gap, your entry, and the runner. That's it. That's it. It's not even that deep. I'm not gonna lie. So that's all I'm looking for is whatever I'm asking for. So it can be high probability supply. It can be support. It can be I need to find liquidity grabs. Like I'm gonna switch it up. It's not gonna always be supply and demand. Like I'm gonna be looking for specific stuff. And it's only 5 charts. Like come on, y'all. It's only 5 charts. So yeah, this is kind of how I want the homework to look. Like gap right there. You don't gotta go overdo it. But the main thing I just want y'all to understand is the setup. That's the key of the homework. Do you understand what you're looking at? That's the main thing. If you don't, then even if you got the gap, the runner, the liquidity right, but you got the demand wrong, the homework is wrong. You know what I'm saying? So that's kind of how I want the homework to be. Just like that. That's all I got. Like I said, Tuesday, I'm gonna sign the homework. Please follow instructions. It's just that simple. Not even gonna lie. But I hope y'all have a good weekend. I'm not gonna lie. I'm not back testing at all. I'm just gonna keep it above with everybody. I'm not back testing. I'm chilling. And Monday we back at it. But all right, y'all. I'm gonna get off of this, man. I'll see y'all in the chat. Peace. Come on, bro.